Good morning, everyone. On behalf of Vetiva Capital and our media partners at Frontier Africa Reports, I would like to welcome you all to another edition of our breakfast meeting. It is Tuesday, the 13th of April, 2021. Please note that this meeting is set to last for 30 minutes, inclusive of Q&A. All attendees will be given an opportunity to ask questions after all speakers are done. This meeting is being broadcast live on our Vetiva online page on Facebook and is also being recorded. The audio file may be shared with third parties. On our agenda today, our junior economist, Ibuku Omoyeni, will be speaking on the SSA report, after which we'll move to Sheung for his take on the equity space, and we'll move to Omorige for the fixed income space. After this, we will move to our partners from Frontier Africa Reports for their own updates. We will now start off with Ibuku on the SSA Outlook. Good morning, Ibuku.
Good morning, Chidozie, and good morning to everyone. So yesterday, we released our FX Outlook report for Q2 2021. So in the past quarter, we actually observed resilience across our coverage currencies, although the fears of rising US yields led to a weaker South African rand. We discovered that higher commodity prices actually yielded positive returns for other currencies, that is the Angolan Kwanza, the Ghanaian cedi, and the Kenyan shilling. Meanwhile, the Naira gained marginally. Nevertheless, we saw that the Nigerian reserves gave up the gains it made from the oil rally, which began late last year as a result of improved vaccine rollouts in Europe and other advanced economies. So we attribute this performance of the reserves to weak foreign exchange inflows to match the rising demand, as major sources of FX were actually held bound. That is the foreign portfolio investment and remittances. So going on to foreign portfolio investment, this was held back by unattractive yields in the fixed income market, as well as the illiquidity in the foreign exchange market. While remittances was also held back by the proliferation of unofficial transfer channels. So we believe that this actually necessitated the rise in yield environment that we noticed since the middle of February, as well as the pro-remittance policies of the CBN. So fresh in our memories are both the banking ban on cryptocurrencies and the Naira for Dollar scheme, which we actually implemented to improve dollar inflows into the economy. So while these policies yielded short-term gains in the parallel markets, we discovered that the directive to credit remittances in foreign currency has had the most significant impact on the parallel markets. So in the forthcoming quarter, we actually expect broad-based weaknesses across our SSA currencies, especially as a result of vaccine efficacy concerns and resurging lockdowns in the export and domestic economies. We can easily refer to the case of Kenya, where it had to go into a lockdown recently. Meanwhile, we actually expect the recent Eurobond raise to support the Ghanaian cedi. Recall that Ghana raised some funds from the international debt market late into March, while we expect external financing to keep both the Kenyan shilling and the Nigerian naira at bay. While Kenya is expecting some support from the IMF, Nigeria would, just as it has been reviewed, Nigeria would soon be tapping the international debt market. Meanwhile, the Angolan Kwanza could actually shed some weight because the supply-driven rally might soon fade away unless demand comes to prop up oil prices. So with respect to the Naira, we actually expect the peg to be maintained at 379 Naira to a dollar. Meanwhile, we expect further depreciation in the investors and exporters window, especially given non-CBN intervention within the window. Finally, we expect the parallel market rate to close the quarter weaker at 490 naira to the dollar. So that will be all on the FX Outlook report. Thank you, Chidozie.
Thank you, Ibuku. We will now move to Shewan for his take on the equity space. Good morning, Shewan.
Good morning, Chidozie, and good morning, everyone. We'll start off with the performance of the index in Ghana as the composite index closed flat, though we saw significant improvement in the market activity with 42 and 48% increase in volume and value traded, respectively. Cowbank and MTN led the turnover chart as investors took position in Cowbank on the back of 11 per dividend declared, which comes to a dividend yield of 17%. We expect the market to be largely positive this week as investors continue to look out for such impressive dividends on corporate earnings. Moving to Brvm, the main index lost 89 bips to sustain previous sessions' negative close. Market activity improved in the session, but a 7.43% gain in SMB Cote d'Ivoire and South Cote d'Ivoire could not prevent a red close for the market. The index year-to-date return dipped further to negative 3.31% on the back of that negative close. So back in Nigeria, the ASI couldn't hold on to the Friday's positive close as the index lost 40 bips to close at 38,712 points. Guinness continued to see sell-offs, dropping another 993 bips as losses in Stanbic, PZ, and international breweries all dragged the balls down. We saw minor gains in Access, Zenith, and a few other banking names couldn't tip the market northward. So we say gains in the banking counters led the subsector as a sole sectoral gainer in the session. Consumer goods continue to see negative flows on the back of losses in the brewery space, which is led by Guinness and international breweries, and it looks like we saw the same thing happen in Friday session, and I think in Thursday session. So this has been recurring, and we mentioned that we've seen some correction, especially in Guinness that went up at 36 naira. Though the activity level improved, but the increase was marginal. And compared to the 3 billion level the market is accustomed to, the turnover recorded was just 1.4 billion in last session as investor sentiment remained negative, which is expected for now. Also, to some company news, we expect share price of Access, Transcorp, Total, and Fidelity to be marked down for dividend payment later in the week. So I think that should happen sometime on Thursday and on Friday. All right, so going into today's session, we do not expect much deviation from the previous trading session. Quiet day is expected aside crosses that we sometimes see in the market. Investor will also look out for inflation reports due on Thursday to also gauge fund deployment. Lastly, we believe investors looking at exposure into the market should stagger their purchase as they take informed position into decent names. That'll be it for the equities market. Thank you.
Thank you, Shewan. We will now move to Omorige for fixed income and currencies.
Good morning. Good morning, everybody. So I'll start with the money market. The money market is still very illiquid. Yesterday, system opening figures was around 9 billion positive, coming from the 45 billion positive negative that was recorded on Friday. So despite the extremely low system liquidity recorded yesterday, we did not see a spike in money market rates as it maintained to trade between 12% to 14%. And this was largely due to the lack of any major funding pressure on the market yesterday. So our expectation for today is that the 20 billion OMO maturities that is coming in today will provide the much needed liquidity in the money market space, and this should drive money market rates lower. So moving on to the FS market. So yesterday, the Naira gained about 3 Naira in the parallel market to trade at 482 Naira to $1, while the in window traded at a high of 420 Naira to $1, closing at 409.75 Naira to $1. So we saw a slight decline in system turnover yesterday. So our outlook for the Naira remains the same. We believe it will continue to hover around these levels, barring any major supply of FS to the system. So moving on to the Treasury-based markets. So the T-based market opened this week on a very active note. The NTB space saw a lot of offers across the benchmark curve as players try to offload their current positions with the anticipation of getting higher rate at the auction. So however, a few trades were consummated across the curve, given that there were no bids in the market. So the T-based market was largely a seller's market yesterday. Everybody seems to have the same view: offload your current holdings and bid at higher levels at the auction. So we saw few trades consummated in the OMO space yesterday, and these trades were largely skewed to the long end of the OMO curve. So our expectation for today is that the T-based market will trade on a very active note as players intensify their efforts to offload their positions ahead of the auction tomorrow. So I'll conclude with the bonds market. So the bonds market resumed this week on a quiet note, though the extremely tight system liquidity saw some bearish sentiment across the benchmark curve. We saw investors offer their positions at very attractive levels as they tried to create liquidity. So despite the attractive offers that we are seeing across the benchmark curve yesterday, with rates closing 10 basis points higher than opening levels, no significant trades were consummated across the curve. And the reason for this is not far-fetched, given that the system is still very illiquid. So a lot of people are just trying to create liquidity. Nobody really has the funds to buy securities at this time. So our expectation for today is that the bonds market will trade on a very quiet note as players anticipate the NTB auction results to give guidance and clarity for interest rate direction. That'll be all for fixed income. Thank you very much.
Thank you, Morgan. We will now move to Sheikh from CGF Burst for their update. Good morning, Sheikh.
Hello, good morning. Over the last week in the Brvm, the market was not very volatile. This was mainly led by the public sector as well as the finance sector. The market realized in this 14th week quotation a second upward trend with plus 43%. But this was one of the lowest performance in terms of volatility in the market. Out of the 46 stocks in the market, only 18 were stable, 16 stocks dropped, and only 12 appreciated. This is outside of Nestle Ivory Coast, which stock performance was minus 15.79%. Outside of that, none of the other stocks grew or decreased by more than 8%. So the market, the Brvm composite, which was the top performance, finished in a positive note. This was mainly through the support of Sonatel, which closed with 1.56%. And Sonatel, just to remind, is basically represents 2/3 of the total market. In terms of the top performers, we're talking about Palm Ivory Coast and CIE Ivory Coast, of which the dynamism of the purchases during the session represented more than 98% of the volume traded. In terms of Palm Ivory Coast, the last publication in the first quarter of 2020, the company recorded a net profit of 7 billion CFA, which is a plus 144%. This was mainly driven by the price of the palm oil. In terms of the lowest performers, you have Nouvelle Edition Ivoirienne, of which the stock, just like I mentioned, dropped by 17.79%. Sorry, Nestle, by 17.79%. And this is mainly due to the volume of sales by certain investors who took advantage of who were trying to, in the third quarter of 2020, the result of the publishing company had fallen by 20%, following an increase of operating expenses and the partial repayment of two write-offs with a return to better fortune close of 324 million CFA. In terms of stock market information, SODECI issued their 2020 annual results, displaying a net profit up by 45.9%. This was mainly driven by a 32.13% growth in revenue. Sonatel Senegal has issued has given a notice for the ordinary general meeting on April 28th, and it is expected that they would distribute a gross dividend of 136 billion CFA to their shareholders, meaning a 1,225 net dividend per share on May 17th. Onatel Burkina Faso issued their annual results, and also they already sent a notice for the ordinary general meeting on April 27th. In terms of performance, the company showed a net income up by 3.2%, i.e. 31 billion CFA. This was mainly driven by 9.7% growth in customer base and a good policy control of operating costs. It is expected on April 27th during the general meeting that they would be distributing a gross dividend of 31 billion, in this case, 399.53 CFA per share dividend on June 1st. In terms of the market, the bond market closed with a market cap of 6.318 billion CFA as of end of last week, which was a drop of minus 0.82% compared to last week. The weekly value traded stood around at 684 million. In terms of the fixed income markets, in this period, only some WEM states intervened on the money market for debt raising, totaling around 160 billion. These states were Burkina Faso, Niger, and Senegal. So Burkina Faso for treasury bonds, and Niger and Senegal for treasury bills of around 80 billion for the T-bonds, 80 billion for the treasury bills. The investor proposed an amount of 407 billion, which represent a coverage rate of 254%, but only 146 billion were absorbed in the market. With regards to this coming week fixed income issuance, it is expected that the state of Guinea-Bissau and Togo would be issuing several treasury bonds totaling 96 billion, and Burkina Faso and Ivory Coast treasury bills, which will amount around 90 billion. That's it for me.
Thank you. We will now wrap up with Temple from Frontier Africa Reports. Good morning, Temple.
Good morning, Chidozie, and good morning to all listeners. From the West African part of the continent, we'll take off where Moody's is expecting Benin's debt to GDP ratio to sit at 46% in 2021, and they do expect that to start slowing down from next year. That will be from 2022. In Ghana, we do understand, and I think this is now a public knowledge, that Twitter has announced to establish its headquarters in Ghana, Accra. Of course, some of the catalysts for that decision is the fact that Ghana is recognized for its democracy status, and it plays host to the AFCFTA, which is one of the points that they raised in the press statements that aligns with this, or that explains this decision. The free speech in that country, as well as online freedom, are some of the other catalysts for that. Still with Ghana, you've got mobile money transactions for the year 2020 settling at 571.8 billion Ghanaian cedis. And this means that they now have some over 17 million active accounts for mobile money in that country, something that is helping them now to keep an eye on that as well. And in line with this, we move to South Africa, where MTN has reevaluated its mobile money markets, and it's the status we understand, or the value is now estimated at 75 billion rands, and they are now considering an IPO. We understand that some times ago, I think it was earlier in the year, MTN actually announced that it will be spinning off its fintech business, and that included the mobile money segments. But we also remember that Nedbank at some point also announced that was in March, actually late March, that the value of that business for MTN was around 87 billion rand, and that's like some $6 billion as at that time. But considering the fact that Airtel Africa has gotten some $300 million investment from MasterCard and TPG Holdings in recent time, and that beefed up the total value of Airtel Africa as money, that's mobile money markets, to around $2.6 billion. That came as a way of challenge to MTN, and the value for MTN's mobile money market now, I think, is around 75 billion rand. And we understand that the IPO will be coming on board. And yesterday, if you look at the share price, it jumped by some 1.7% after the announcement. This is something that the CEO has also welcomed, and the whole world is now eyeing that segment. SADC community, that's the South African Development Community Bloc, is meeting the stock exchanges in that region, meeting to review the green bond integration, the green bond markets, and see the possibility of integrating in that area. For the northern part of Africa, you have Egypt expatriates remittances rising by more than 10%. For the period July to January 2020-2021, and that's like some $18.1 billion compared to $16.3 billion in the base year for the same period. You have in Morocco the possibility of launching a digital investment platform for citizens living abroad. So Moroccans and diaspora will also have an opportunity of reinvesting their proceeds or their funds, their profits back in their country, as more countries around the world also try to do the same thing. For the eastern part of Africa, I think for us, the key story there will be the foreign exchange reserves, which climbed to $7.4 billion. As at the moment, that's the status of that reserves. And these are the headlines we're tracking at Frontier Africa Reports this morning. Thank you for listening.
Thank you. We have now come to the question and answer portion of the meeting. If you have a question and would like to speak, you can raise your hand and you'll be given an opportunity to speak, or you may use the chat box and we will treat your question. I see Olusola has their hand up. I will now give you an opportunity to ask your question. I've asked you to unmute your mic. You can unmute your mic and go ahead and ask your question. Thank you.
Okay, good morning, everyone. Please, I would like to know what your take is on around the interest rates for this quarter vis-a-vis the various government activities. Last week or so, there was a news about the Euro bond and some other things that government are doing in order to show up our revenue, so such that the deficit parts of our budget will be reduced. But then on the other leg, I also read about the Euro bond, so I'm like, what exactly are your thoughts around our interest rate?
Okay, thank you. Our fixed income analysts will now, our fixed income analysts will now treat your question. Omorige, you may please answer the question. Thank you.
Hello, can you hear me clearly?
Yes, we can hear you clearly.
Okay, so given the news I spoke about last week, the DMO said that they are trying to conclude their plans regarding the issuance of Eurobond in the market. So with that, we believe with the new supply of Eurobond into the market, that will kind of like provide extra security in that space. So people will have more options, and with the extra liquidity in that space, we believe that we'll see a slight spike in Eurobond rate. So that's taking that into the fixed income market. So like we have always said, we believe that rate will continue to increase for this quarter. So our subsequent auctions, like the last auction, we saw a 50 basis point increase on the long end. So our view still remains, we believe that there will be a gradual convergence between the NTB rate and the OMO rate. The OMO rate is currently at 10.1%. So given what's currently happening in the local market also, where the DMO continues to borrow more than what they have on offer, at the last bond auction, they did the same thing. So all this speaks to the fact that the DMO plans to issue more debt. And with that, we believe that there will be increase in rates in the fixed income market. And also, they also have to, that will cascade to the Eurobond market also, since they are issuing new securities, they'll probably issue it at very high levels also, just to attract more local more FS, given that our foreign reserve continues to decline, dollar supply, they'll probably
Seems we're having issues, technical issues with Omorige's network. Omorige, I see Dapo wants to add. Omorige, are you back with us? Okay.
Hello?
I think, yeah.
Okay, I'll just
Sorry,
jump
I
in.
was saying that. Well, I'm done. Thank you.
Okay.
So thank you, Chidoze. Thank you, Omorige. Good morning. Very quickly, Omorige, I'd noted that our view remains that we'll continue to see upward pressure on interest rates even in this quarter. We expect that the Eurobond issuance wouldn't be concluded anytime earlier than a month. So probably till end of this quarter into the early part of the next quarter is where we see the issuance coming up. Pretty much that should provide some respite with the bearish hunt at the local space. But again, if you look at government deficit, if you look at the fact that it appears the ways and means where CBN was able to fund government is being regularized, and that window seems to have shut out. you start to see why we've seen strong bearish pressures in the market in recent times. So again, our views for the quarter remains upward with respect to interest rates. We might see things moderating marginally depending on how quickly they're able to issue euro bonds to reduce the funding pressure on the local side. Regardless to when we look at other factors like maturity profiles going into May, going into June, with respect to the system, it's quite tight as well. And that would again leave interest rate under pressure on the back of that. There are other market factors that also points to we having some level of upside pressure remaining on interest rate. The economy is not so strong yet. We're just coming out and hopefully looking to get better performance in the coming months. So government revenue on other fronts might also be under pressure. All prices have been topsy-turvy. We've gone to 70, come back to 60 levels. Again, that is better than government projection. But regardless, the shortfall on other sectors and also the fact that we're not producing as much as the budgets that are captured as well, or our capacity, let me use that word, again means revenue shortfalls are still imminent, regardless of where oil prices are much more elevated than the budget benchmark. So when you combine all these factors, you start to see that funding remains a thing of pressure for the government at this time. And the local market circumstances are also very evidently not in the favor of things given maturity profile. I mean, unlike last year where we had so much maturities and we saw that impact the market was constantly liquid. That's not the same this year. And so when you combine all those things, you see that even if we get some respite from Eurobond issuances much later in the quarter or early next quarter, we still see interest rates remaining under upward pressure in the near term. That's just what I have to add to it at this time. Thank you.
Thank you, Dapo. We have now come to the conclusion of our meeting. On behalf of Vetiva Capital and our media partners at Frontier Africa Reports, we would like to thank everyone for joining us today. If you do have any further questions, don't hesitate to send us an email to research@vetiva.com and we will get back to you. We continue to encourage everyone to remain safe and we look forward to having you join us again tomorrow morning at 8:30. We hope everyone has a good day. Goodbye.